What if one person had more money than a whole nation? Can a single individual really hold wealth exceeding what millions of people in a country earn in a year? And how did this surreal scenario come to be? These questions might sound like exaggerations, but in today's world, they are astonishingly real. In 2025, the combined wealth of the world's billionaires reached a record $16.1 trillion, a figure greater than the GDP of nearly every country on Earth except for the United States and China. This means dozens of individuals now have fortunes greater than the economic output of many nations, a fact that can feel almost impossible to comprehend. Before delving into the stories of these billionaires, it's important to understand what we mean when we say someone is richer than a country. Net worth measures the total value of a person's assets, which includes stocks, shares, businesses, real estate, intellectual property and cash, minus any debts. Gross domestic product, or GDP, on the other hand, represents the total value of all goods and services produced by a country in a year. When an individual's net worth surpasses a nation's GDP, it means that their personal fortune exceeds what an entire country produces in a year. For instance, Elon Musk, with his fortune in the hundreds of billions of dollars, has at times been wealthier than countries such as Hungary or Peru. Jeff Bezos, Mark Zuckerberg, Bernard Arnault, and others also hold wealth that rivals or exceeds the GDP of several nations. This isn't simply a quirky fact about the ultra-rich. It reflects a profound shift in global wealth distribution and economic power. Who are these individuals, and how did they amass wealth of this magnitude? Let's begin with Elon Musk. How does one person amass wealth that rivals entire nations? Elon Musk's fortune primarily comes from his stakes in Tesla, SpaceX, Neuralink, and other ventures. His net worth has fluctuated near or above $300 billion in 2025, with some estimates even approaching $600 billion. This is more than the annual GDP of countries like Hungary, Slovakia, or Peru. Musk's wealth is the result of owning high-growth companies at the forefront of innovation. Tesla revolutionized the automotive industry with electric vehicles, while SpaceX reshaped the space exploration landscape. Neuralink and his AI ventures promise even more value in the future. When the stock market values these companies highly, Musk's personal net worth skyrockets, illustrating how modern wealth is closely tied to technological innovation and investor perception. Jeff Bezos tells a similar story from a different angle. Starting as an online bookseller in a small garage, Bezos built Amazon into one of the largest companies in the world. His fortune, often above $200 billion, has at times exceeded the GDP of countries such as Hungary. Bezos focused on long-term growth, reinvested profits, and expanded into cloud computing, logistics, and entertainment. Amazon's stock performance over decades turned Bezos's equity into a staggering personal fortune. The combination of innovation, scalability, and market dominance created an unparalleled wealth accumulation. Mark Zuckerberg, the founder of Facebook, now Meta, shows yet another path to extreme wealth. Once a simple college project, Facebook became a global social media platform, with Zuckerberg's net worth crossing $200 billion. His success came from being at the right intersection of social media, mobile technology, digital advertising, and the emerging metaverse. The growth of user engagement and digital monetization allowed him to amass wealth that surpasses the GDP of nations like Algeria. Bernard Arnault, chairman of the luxury conglomerate LVMH, built one of the world's most valuable companies in fashion and luxury. His fortune rivals or even exceeds the combined GDP of smaller European economies. Luxury, it seems, is more than style. It's a multi-billion-dollar global enterprise. Other billionaires such as Larry Ellison, Larry Page, Sergey Brin, Warren Buffett, and countless others also hold fortunes that dwarf the economic output of mid-sized countries. Collectively, the world's billionaires now control a financial footprint larger than almost every nation except the United States and China. So how did this extraordinary accumulation of wealth occur? It's not a random event, it is the result of multiple structural forces reshaping global economics. The first major factor is the explosive growth of technology over the past 3 decades. Digital marketplaces, cloud computing, mobile connectivity, artificial intelligence, and automation have created opportunities to scale businesses far beyond what was previously imaginable. Tech companies can expand rapidly, reach billions of users, and generate enormous profits, which in turn inflates the wealth of the founders who retain significant ownership. The second factor is the way modern financial markets reward innovation. Stock markets today often value companies based on projected growth rather than current profits. Investors are willing to pay astronomical amounts for shares in companies that are expected to dominate future markets. This means that the personal net worth of company founders can rise exponentially without them needing to sell a single share. In effect, wealth is being created at the speed of innovation rather than the slower accumulation of tangible assets like land, factories, or natural resources. Globalization and the mobility of capital play another critical role. A company in Silicon Valley can reach global markets overnight, scaling operations and profits far more quickly than any business in the pre-internet era. Wealth in the 21st century is increasingly tied to ideas, networks, and intellectual property rather than physical assets. This allows a single individual to leverage global markets in ways that were unimaginable just a few decades ago. Government policies and regulatory frameworks have also contributed. Tax structures, favorable investment policies, and low capital gains taxes in many countries have allowed significant accumulation of wealth at the top. While average wages stagnate in many parts of the world, the value of capital held by a few increases rapidly, creating vast disparities between the ultra-rich and ordinary citizens. Is this concentration of wealth a sign of incredible opportunity, or a warning of rising inequality? On one hand, it is undeniably inspiring to witness the scale of achievement possible through innovation and entrepreneurship. Billionaires have funded space exploration, AI research, medical breakthroughs, and countless other ventures that have changed the world. Their wealth is tied to businesses that employ millions and generate value for consumers. However, the fact that a handful of individuals control wealth greater than entire nations also raises serious concerns. Millions of people around the world struggle to meet basic needs including housing, healthcare, and education. When such a small number of people accumulate an outsized share of global resources, it inevitably concentrates economic and political power. This is more than a theoretical issue. Reports consistently show that the ultra-rich control a disproportionate share of global assets, while middle-class and working populations face increasing financial vulnerability. This brings us to another important question: should governments intervene? Some economists argue for wealth taxes, inheritance taxes, and capital gains reforms to prevent extreme concentration of wealth. Others warn that excessive taxation could stifle innovation and entrepreneurship, which have historically driven economic growth. The balance between rewarding innovation and ensuring social equity is a central debate for the 21st century. Can a single billionaire wield more influence than a government? In practical terms, they already do in many ways. Wealth allows individuals to direct investment, shape technology, influence media, and fund political agendas. Elon Musk, for example, can invest in space exploration in ways that rival national space programs. Jeff Bezos funds projects that affect global logistics and cloud infrastructure. Such influence, concentrated in private hands, raises complex questions about accountability, governance, and the public good. What lessons can we draw from this phenomenon? First, wealth today is increasingly tied to ideas and intellectual property, rather than physical resources. Second, the modern economy rewards scalability. One person through technology and global networks can control assets that impact more lives than millions of ordinary workers combined. Third, social, political, and economic systems must evolve to balance innovation with fairness, or the consequences of wealth concentration may intensify. Looking forward, several questions loom large. Will billionaires continue to pull further ahead of entire countries? Will governments adopt policies to redistribute wealth more equitably? Can societies ensure that innovation and economic growth benefit the majority, rather than just a select few? These are pressing questions that will shape the economic and social future of the planet. In conclusion, the phenomenon of individuals being wealthier than entire countries is both a product of human ingenuity and a reflection of the modern economic system. It represents unprecedented opportunity and progress, but it also exposes deep structural inequalities and societal challenges. The story of extreme wealth accumulation is far from over, and its consequences will touch every corner of the world. As we move further into the 21st century, society will have to grapple with the question of how to balance innovation, reward, and fairness in a world where one person can indeed be richer than a nation. How will this new reality reshape our economies, our societies, and our understanding of fairness? Only time will tell, but one thing is certain: the age of ultra-rich individuals outpacing countries is here, and it is changing the world in ways few could have imagined. Thanks for watching. Don't forget to like and subscribe to our YouTube channel.